Hi guys, how are you? Vlad here, and this video is instead of our Monday live room meetings normally, simply because I will not be here on Monday. So I record this video in advance for you a bit earlier this week, so you are prepared and you have our weekly plan. So this is going to be the full video, which means all the instruments, our weekly preparations. So for those of you who are watching it for the first time, welcome on board. This is the trading report that you will get together with the video. You get one report after every live session that we have. In that case, now I record the video and I publish that together. This trading report is basically our whole list of the watch list. What are we looking to trade? So here you will watch the video explaining you how we use the trading report. In the comment section you will find all the most important webinars to watch in order to understand how we work, how we trade with the live room, how we prepare our directions, long term, short term, and what everything means. So watch that on your free time, of course, no pressure, no, on your own pace, as many times as you need. That's the most important thing, you know, because some traders can understand it, oh, boom, right away. For some traders it take a bit longer, so do it on your own pace, please. Ask all the questions in the Telegram groups. That's the idea. Then you scroll lower, you get here the full explanation of our directions, long, short, or both. If we don't have any clear cycles, everything is explained for all the markets: forex, CFDs, commodities, indices, short-term ideas, cryptocurrencies, and so on. And then you have here when you scroll lower, the watch list. This is basically where you click the chart and you receive the cycle, the way we are looking to trade the cycles. Okay, so that's the whole idea. You click there, you got understanding. So everything that we have in the live rooms is explained for you in the report. So what we will be doing now is go over the whole list of the setups that we have here. I'll start with the European pairs and we'll continue from there. The euro dollar is basically on the short term still in a bullish pressure, where we would expect that to turn around soon, anywhere from 118 to 120, and make for us one more drop to the downside. The whole idea here is get this push before a possible turn around further long, and then we will see. It's slightly early to make any decision as for now. The way it looks on the 4-hour chart, we currently have the two waves. We might get it a bit extended to here, or slightly higher to this area. Okay, maybe even trying to clean the psychological 120 before we turn around and go for the deep move to the downside. If we drop here the cycles, we figure out that we are currently dancing around the 100, the 161 is slightly higher, and this is why 118 to 120 is our critical area for the turn around that very likely to happen. Meanwhile, on the short term, we can still try to clear this area, try to push higher. That's all acceptable. Okay, so for the short term, we can still see the euro dollar pushing to the upside, and this is exactly our weekly plan. Rallies with new highs, we would be looking for the sell setups. Meanwhile, short term drops, especially like it ended with Friday with a bullish hidden divergences, can still cause the pushes to the upside. That's our plan for the euro dollar. Euro versus the pound, our whole idea was and remain sell because of the weekly triple cycle. So we got 1, 2, 3 false break, divergence, voila, we are looking for that. The problem with that is that it takes time. That means that it could be several weeks or months until this will turn into a reality. Meanwhile, on the short term, we are moving inside this channel, and we can get closer to that before we are actually in the cell. So we have here a double cycle developing. This area is critical, such as every one of the next levels, where we will be looking for our long-term cell setups take place. So for those who are into conservative trading, approaching to these areas would be smart thing to do and look for cells from there. For those who are into aggressive trading, then can work in the short term directions, trying to buy the dips, trying to approach to these areas. Keep in mind, this is risky trading against weekly and daily directions. Can still pay because it has the room in that case, right? But it requires lower risk, simply because we are working here against the main money flow. That's very important, and this is our plan for the euro pound. Long-term rallies to be sold. Next pair on the list is the euro yen, which was very good on the previous week for us. And we expected the short-term rallies, which took us exactly to where we wanted, at the 129.50 up to 130. The biggest question is, what's next? Now here comes a bit of, I would say, confusion, because according to the weekly cycle, we were in a double cycle here, target reached, we were aiming the 38 to retrace, we got it, game over. Then we got this double cycle with a bullish divergence, and we expected a retrace to the upside, and guess what? We can see that on the daily chart clearer. And guess what? Boom, 38 to reached, game over. So that basically means that we don't really have any clear cycle to follow with the weekly and the daily plan, and therefore the euro yen currently is directionless. It can easily take us once, which I personally think is going to happen. We should most likely get this one more drop, but you can see it has for us doors open for both directions, so there is nothing to trade currently with this pair for the long term. The whole direction would be on the short term. To spot the best setups in such situations, it would be to go with the last current momentum. So when we get on the rally, for example, on the 4-hour chart, bearish pressure, look for the short-term sells. When you got yourself a bullish hidden divergence, look for short-term buys, etc, etc. This is the idea how to gain the short-term momentum. Daily and the weekly not in play for us, therefore 4-hour, 1-hour chart combination become the most relevant. Okay, now this is for the euro yen. Nothing clear for the long-term or short-term plan here is for both directions. Euro versus the Aussie, this pair is a monster, and it paid amazingly to the downside. Now it's making for us the short-term rallies, which we currently of course accept. That's the whole idea with this pair. We got 1, 2, and we expect one more, one deeper. And the thing here is that it got kind of a special cycle on the second leg of the blue cycle, which makes it to be extremely interesting and supportive in the direction that that's what should come. Now for that to happen, we drop to lower time frame, and we expect to see here the support for that. So we are getting it, and this should be our best area to follow up, or slightly higher around the 157, approaching there, and we would be after our sell direction. So for the short term, we can still enjoy the rallies, but for the long term, we would be after sells according to the daily and the 4-hour chart. So once the daily and the 4-hour chart get the combination with daily divergence and 4-hour chart to form divergence by itself, then we can start looking for our sells. And this is the plan for the Euro Aussie long term sells. Short term can still see these pushes towards 156, 157 would be our areas. The next European pair is the Euro versus the Canadian. Same story. For the long term, we are for sells. We got a triple cycle from the weekly, which we would want to go and to see making us long term sell here. However, it most likely will take some time. The daily, was an amazing cycle where we would expecting on the previous week we were bullish there all the way to the 38.2. Since we almost are there, our bullish plan, our buy plan that we enjoyed from the whole previous week is pretty much over. We would be looking for the sell setup. So what we would want to see now is to look for rallies, this area to hold or this area to be cleaned, and look for our next sell setups. Okay? I would not be surprised, to be honest, if we can get something like that. 1, 2, 3, 1, 2, one more, and sells. So for the long term, as mentioned before, we would be after the sells positions, and for the short term we can still see drops and bullish reactions according to the corrective cycle that this pair currently has. And for me the best combination would be one to see the daily with the 4-hour chart forming the reversal. Keep in mind that in such situations the first breakouts normally aren't too reliable, so if you get some kind of trendline breakouts or some kind of false break, they might be fake simply because the weekly direction is bearish and the daily was in correction with the 4-hour chart. The first tempting conditions are normally to bring the let's say the simple money in to get the temptation to make the traders enter position before the real time comes, before the real money comes in, make them lose and then come and pick that up. So keep that in mind, it's important. It's a very important trick to spot good times. That's all for the Euro CAN. The next European pair we have on the list is the Euro versus the Kiwi. For this pair we are also into the bearish direction. We would want to see the pair making for us something like that, so we can go and deeper buy later on. And that's all, exactly like the other pairs. Longer term sells, short term we still want to see that happens. Okay, so short term rallies, long term sells. Euro versus the franc is sells for us. We got this cycle and now we are getting the second cycle, so everything above 116, 116.50 is our place to look for sell setups, which means looking for bearish setups with the strategies that you use. It doesn't matter what is the strategy, with the strategies you use to enter and manage your positions. Automatic strategies, manual strategies, really doesn't matter. What does matter is the preparations for the directions that you work with. That's for the European pairs. Now the dollar pairs. Dollar versus the yen is our next pair. Now dollar versus the yen is kind of tricky, and here is why. As long as this trend line holds, we expect move down. But if this trend line breakout, so that's all game over. No, right? So I wouldn't really rely on that. Currently it's bearish hidden divergence, which is good. The way I see that was this mini false back that we got here and here. This pair is more to the sells than to the buy, so for me this pair is in the sell rallies. Okay, the previous week we got this. Now every rally we have to the middle of the way or for one new fake high would be to go for a sell position. Dollar yen bearish, sell the rallies. Dollar versus the Canadian. Now this pair is, from my point of view, completely not clear. However, it might be the one that will move and move big time. All the discussions about the tariffs between the US to Europe to Canada and so on could cause this pair to take us towards the 132, 133 and crash, or alternatively finish with this wedge breakout and sell. As for now, there is completely nothing clear with the dollar CAD. You can see that yourself if we drop lower. So dollar CAD is completely tradable for both directions, acceptable for both directions. I would not deal with this pair as for now. For me personally, every new high that we can get, and if we get, would be a good opportunity to start looking for sales. So everything above 131, 132, 133 would be a great place to look for sell opportunities. For me, it's sell the rallies, new rallies, or waiting for the wedge to be broken first of all. As for now, this pair is only for the short-term directions, and both completely are acceptable. Dollar versus the franc. We are after buys according to the bullish hidden divergence that these pairs suggest. There is nothing clear on the 4-hour chart, so the way to work with this pair is basically wait for, well, clear, let's say this is our false break, moving averages in play, this is our high, so get convergence for and then buy dips, or alternatively get here a ranging pattern, one more push to the downside and turn around upside. My view here is bullish for the long term. Short term can still push that slightly lower, and we have the area from the daily previous cycle 38.2 down to 50 would be very acceptable zone for the short-term sales. That's for the dollar pairs. Pound versus the dollar, the way I see that is this, which means sell rallies. On the 4-hour chart, I would love to see the pair trying to get closer to 135, 136, and then creating this divergence and go for a sell. So from my point of view, long-term sales, short-term is still bullish. Pound versus the franc, same idea. For the long term, with the bullish hidden divergence to form, the pair is to the upside. However, on the short term, it was one leg to the downside, mainly one leg in play, and I would like to see that doing one more low before it turns around down to 130 or 128. So for the long term, the pound franc is completely bullish. For the short term, I think this correction is about to end and bearish. Short term sales, sell rallies. Long term buy dips on, especially if that follows new lows. Pound versus the yen for us remains kind of a mystery. There is no clear cycle for this pair. I would still prefer to go for buys, to be honest, on the short term, simply because we have two cycles in play here. This is one, this is two. So for me, it is completely unclear, and I would be looking for short-term buys, to be honest. So something like that. That's my preferred scenario. 1, 2, 1, 2, boom. The pound yen, both directions completely in play. Only short term currently I would prefer at this stage buy dips. Pound versus the Canadian. Here we are. This pair was one of our favorites on the past several weeks. We enjoy a massive sell-off, and now this pair is in completely confusing scenario where buys and sells has completely same probabilities, and this is why this pair for me is only for the short term. The way I see that, it should do something like that, very likely. Not one of my favorites. I would let's name it as it is. Not one of the favorites at this stage. Both directions are completely acceptable to be traded. Nothing clear. Pound versus the Aussie is one I like better. Pound, but for the long term, for the short term, I still wanted to see pushing higher before the sales takes off, and here is why. Because according to the cycle that we have here, we have a triple cycle to the downside, which could be also named as a special cycle. It could even start from here, range, big move down, okay, and on the same time it could be called double with triple cycle on the first move, triple cycle on the second move. Completely acceptable for both, but the whole idea here is we can, and ideally we should, see that moving higher towards 178-ish or higher before the sells. And this is my plan for the pound versus the Aussie. Long term sells, short term still upside buys. That's for the pound versus the Aussie. Pound Kiwi is another, the one that we have no clear view, and here is why. We're still stuck in the range. This is my favorite scenario: push lower and then buys, but this pair has nothing clear in terms of the cycle, so it's completely acceptable for both directions, short term only. From my point of view, we have much better opportunities on the list. Next one on the list are the Pacifics. Australian versus the dollar, bullish for me for the long term. Short term can still dance around this area or so, but I would expect one more push to the upside. This is the invalidation zone for this scenario. As long as we are above that, I would be looking to see the price moving further to the upside, aiming the 50% of this cycle, something like 070, 750, 078 is definitely possible target for the Australian dollar. Aussie versus the franc, for the long term we remain in a bullish view due to this massive cycle that we had from the past. This is what we expect, of course, for the very long term. On the shorter view, the pair follows here a channel and now stuck inside a range, so this is a good zone for buys. So bullish it is for Aussie franc. Aussie versus the Kiwi, for the long term our plan is also bullish here, right? We are currently in a range, every drop is a buy for us. That was always our plan. On a daily we are facing now the second leg correction, so 108 and lower, like 107 ish. We will be looking for this bullish hidden divergence to form and create for us the reversal. So on the long term we are for buys. On the short term, however, I would not be surprised if we keep that pushing slightly lower before the buys takes place. In order to find the best spot, we drop to the 4-hour chart, which we're right now. We drop the Fibonacci expansion, and this is the area 107 zone. We have also 106 area. That would be the places where I would want to see the Aussie Kiwi providing us the next heavy bullish portion. So long-term buys, short-term can definitely still push lower for this one. Australian versus the CAD is, from my point of view, one of the not clear situations. It is stuck inside this range, this channel, and of course the big range, and we are currently right on the middle. Therefore there is nothing obvious and clear with the Aussie CAD. Short term trading only, both directions are acceptable and in play. Australian versus the yen is our long-term sell due to the weekly cycle. We want to sell the rallies. On the short term, we are still good to go with some kind of rallies. If we get them, we would definitely want to deal with them, and they can still push slightly higher before sales take place, but I would deal with long-term sales here. I think they are safer than the short-term opportunities. So for me, it's sell rallies or sell new highs. That's my preferred thing. That's exactly what we've had in the previous week. It was massive opportunity for us. We enjoyed from this move with the bearish divergence. Was monster, simply monster. Now we would want to see the rallies or even new high. We would want to go for sales. For those of you who do love the aggressive trading, fine, you can try to enjoy the short-term rallies, but for those of you who prefer the conservative rallies or new highs, is better to look for the sells. New Zealandian dollar is, from my point of view, approaching to the sell area, which we would want to enjoy from. It's building up a bearish hidden divergence, and I think it should then sit around 070, 071 zone, which it currently has. This is the cycle we are currently facing, and this is our area, the 070, 71, slightly higher. That's where we would want to see the pair providing us the sell opportunities for the longer run. Meanwhile, these little rallies are completely acceptable. New Zealandian versus the Canadian is bearish for me due to the bearish direction that we have from the weekly and the range that we've had. We expected to try and aim the lows. Daily chart has a bearish hidden divergence in play, and the 4-hour chart is building up the confirmations. We are currently around the critical area of the 161.8. 261.8 could also come in play here before the sales takes place, because this pair is acceptable special cycle here. So New Zealandian CAD for me is sell direction, and with the systems that you work with, I will be looking for sell setups. New Zealandian versus the yen is another pair which I suspect should reach the bottom of the weekly range later or sooner. For the long term, this pair is a sell. For the short term, however, this pair has for us here a triple cycle. This pair has for us a double cycle, with where each of the legs is a double cycle by itself. So for the short term, New Zealandian yen can completely and acceptable technically reach the area of 78, 79, and this is what I expect here to happen. So New Zealandian yen short term buys. Long term, we would be after sells from these levels once we reach them. And two last pairs on the forex are the CAD versus the yen, another pair that we are bearish for the long term. This is our cycle here that we are working with, currently in a range, so rallies for us to be sold. This is the weekly plan, so we would want to see the daily and the 4-hour chart providing us the setups, which means two waves, ranges, or bearish hidden divergence. So if we get here a bearish hidden divergence, it could be great to look for the sells take place. CAD versus the franc, we are after long term buys here. This is the scenario. That's what we would want to see for the long term, and on the short term we are looking for the buys. Currently it's building up a bullish hidden divergence on a daily chart, so 0.75 zone and lower is the best area to start looking for buys here, or slightly lower we are after buys, and buys only for the long direction. This is for the forex of this week. About the commodities, gold and silver are bullish, especially gold has two critical areas, 1280 and 1260. So as long as this one holds, I'll be looking for buy setups. If we break that through, then we are going to the full channel here, and 1260 for buys. I would be looking and waiting only for buy setups, ignoring the short-term sells. That's my personal view. It doesn't mean it cannot work. It just, from my point of view, safer. So I consciously choose to ignore the sells if they happen. And this is the silver, which also has for us a long-term range and seems like holding this area stiff. So for me, I look for the buy setups. Nothing changed. I go over that quickly simply because we are following that for several weeks now. So our plan remains stiff and really no changes. And that's why I don't go over that once again fully. Our plan was and remains the same. The one that we are here trading is oil to the sell direction, expecting the second leg to take place. So bearish sell the rallies on daily or the 4-hour chart. If we get any of this, we would be after good sells there. So oil is bearish, sell rallies for this instrument. And we have the German DAX. We are bearish here as long as this top holds. This is the invalidation. We are trading the weekly head and shoulders and the weekly convergence that we had before. So that's why we are for long-term sells. And the short-term invalidation for us, as mentioned before, is this. And that's the only one we are currently working with, trading with. The rest we are waiting for clearer setups. A few words about the cryptos. There are several that are very interesting ones. The first one is the Reno, and this one is the play. I like that, the Monero, sorry. I like the Monero here, the XMR setup. Very interesting from my point of view. It's on the bottom of the dropping flag, dropping triangle with a bullish divergence developing. From my point of view, it's critical area and we should be looking for buy setups. That means we can drop to the 4-hour chart, start looking for the false breaks and the turnaround or trend line breakouts. I love the levels. I believe in several days it should be bringing it to a great setup. The next one which we have is the Bitcoin Cash, BCH versus the dollar. Here we are, same story. We have here a beautiful zone and the two waves that provide us 61.8 of the cycle, getting closer their divergence. Mark the trend line and breakouts, we would be looking for the buy. So on the short term, they are currently under bearish pressure, so we might get this kind of setups and trade them, and after that we are for the reversal. So several days which might form this week or during the week, during the next week. I believe this is what requires the attention. Next one is the Ethereum, which also currently holds a bearish momentum, but I would be looking to, here we go, to reach the massive cycle zone around 400, maybe slightly higher, and get ready for the buys. Mark the trend line and the breakout. So currently bearish, soon should turn around bullish. Logically we should start to get some kind of bearish period of the news, some negative news coming one after another for several days. it should look like the end of the world is coming for the cryptos before the turnaround happens again. And the last one, the final one, is the NEO, which I personally like. Let me just find that. Here we are, also approaching to some critical level. This is a triple cycle. This one is finalizing 1, 2, 3, and this is a cycle by itself. Divergence in play, and again the level starts to be critical. And from my point of view, we should be paying attention to the 61.8 of this cycle. We are coming there, coming closer and closer. Anything below 40 down to 30 is the place where I would expect the reversal to start and build up. Meanwhile, they are in bearish momentum, which means sell rallies could be still the best plan on the short term for the cryptos. For the long term, I wouldn't bet on that. So that's all, guys. That's what we have. That's our plan for the entire week. As I mentioned in the beginning, I would not be able to hold that live tomorrow simply because I'm not around this Monday. So I'll see you on Tuesday, guys. If you have any question, of course, don't hesitate to ask us in the Telegram group. The report would be attached with this video, of course. So I wish you a wonderful trading week. And last thing I would want to cover is basically our here it is, our calendar for this week. It's full of important news. At the beginning of the week, we might see the market looking for the setups. It starts from Tuesday mainly with the CPI and the core CPI in the US, then the CPI in Britain, and then boom, warming up PPI, and of course from the US, FOMC economical projection statement and the funds rate. Everything on this Wednesday. The expectations from the Fed to go and hike it this time. That's where it will become interesting, and everyone would basically want to hear the hint for the future. So then we follow, of course, on Thursday we have the press conference from Eurozone, then from Japan. Busy fundamental week, so trade safe and wait for your clear opportunities. Don't try to make any kind of hero calls because it looks good. Wait for facts. Trade facts. It's extremely important in such periods. That's all for now, guys. Thank you very much for watching. I wish you wonderful trading week. Yours, Vlad.